Oh, and good morning, everybody. This is the Hawkeye session, Friday. This is Friday, December 4th, and we'll be going to about 9:30. This is Open Mic Friday, so anybody is welcome to turn on their mics, ask questions. Doesn't matter what the topic is, as long as somewhat trading related. And trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with the foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. This is a live trading room. It is for educational purposes only. No financial advice or recommendations will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money you cannot afford to lose. Before trading live, always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And with that, we will go to the charts. We had a few alerts this morning. Euro US was the last one to 745, and we will go put that one up, and we'll see what we have with that. And I will change my screen. Share. And here we go. And everybody sees my screen. I hope. It looks like the euro. We get the alert pretty much whenever we get these alerts. It's been breaking out of the bottom. So looks like it's we have the break of the wedge. It's just a 745. It was a ascending wedge, meaning you're looking from low to high. And so looking at right now, it's looking at a break to the bottom. Possible target would be down here. We had the break right in this area. Down here would be. That's a 15 pip target if it gets down that low. I would say if it comes back up and retraces back up into the wedge, try and take it short. We do have all the moving averages on all three time frames are in the right direction, I believe. Yep, we have the crossover of the green. So we have now it looks like we could be getting a bounce off of the 15-minute 62, which is right here. I'll mark that on the chart. And so we have that is right at this point right here. So we may be careful of a bounce. If we get a bounce off of that, we may be real careful with that. That usually does bounce off of the first time it hits it anyway. There is a little bit of upward momentum, or downward momentum, but we'll have to take a look at that as we look at this a little bit closer. But here's the 1562. We do have the 5-minute 62, which is above us. So right now it's sort of sandwiched in between this little area. I would be looking at this as some of another range that's sort of developing. We have a drop. Here's a little doji right here on the 5-minute. So we're kind of sandwiched into this little area right now. I would like to see a little bit more of a commitment of a breakout. If it could be a drop, it could be basing. If it can break out the bottom of here, I just take it short and go for the 5-minute 62 or the 30-minute 62, which is right down here. And that's at 2142. And so that would be plenty of room for a target if it breaks out. If it can't break out of the bottom, we may want to be looking for a retest of the wedge and then see what happens with that. So it's still a little bit early, but there is we'll keep an eye on this one. We're looking at the RCS tool, and the RCS tool says that the euro is the first currency of the pair. So we're looking at the euro's showing weakness to the dollar showing a little bit more strength, not a whole lot. There was a pretty good move overnight, I believe. Let's see, where would that? We had some euro strength overnight. Let's see what it looks like on the higher time frames to the upside. I'll check this out and see. Right now, I made a new high last night, which so right now it's coming. The yesterday's low is right down here, and so it has been trending to the upside, and we do have a nice strong trend. So I would look at this as a target as well. We have a little bit of a pivot, a little trend line here at the bottom. This is near the close of yesterday's close to the high. So this is pretty much where this is the area where it opened and we're closed yesterday and opened the next day. So I'm going to be looking at this area as a possible zone to be looking at for a possible bounce out of this area. But there's a lot of consolidation right in here. And let's see, that's on the hourly chart. Let's go back to the 15-minute. We'll tweak this up a little bit here. This is the current trend line that we have. It's going to have to break through the bottom of this. This could be a head fake. So be careful. We have to be careful with that. And so that's, I say, as long as it's in this box right here, we're going to stay away from it. Just let it base in here and see which way it wants to break. If it bases long enough, it gives room to the upside to the bottom of the wedge. And if it breaks out of the bottom, it's going to be looking at this area right in here as maybe a trap to maybe go back long. It is, you can see it is in a stronger upward trend.
Yeah, look at all the hits.
A lot of hits. So right now, this is what we're looking at. This could be the trap area right in here, where these two angles of the wedges consolidate. I'll take it right from the bottom of the base of these candles. Use this wick as a reference, and we'll use this as a possible trap. So I actually like it more to the upside just because of the channel that it's in. It did make a new high. It did retest the high up here. So if it does break, it could break pretty hard. So just have to be careful with that one. Let's go to the Aussie US. And a lot of the same type of scenario. It has almost a somewhat of an same picture type of thing. This is the area where this whole big move came from. This was a couple of days ago. This was yesterday. This was Thursday or Wednesday. Here was the reversal. Nice strong move up, coming up. And so right now, this is the area that has been trading in. If it breaks to the downside of this wedge, this is a first target for supplies for a demand zone. And if it can break through that, then it's going to go quite a bit lower. But right now, this is yesterday's low. It'll probably come down. There's a good chance it'll come down and retest that low. And we'll just have to wait and see what happens after that. Right now, I'm not seeing. I would like to see it come up, test the upper wedge. Look at this. I kind of like this as more of a. This is kind of a trap area, just because it's had such a strong move up. This may come on up, make it. I'm looking at a possibility of a price action, something like where it comes down, comes back up, retests, and then comes back down and breaks out. So I'd say like, but it could do it. It's hard to say which way this thing's going to go. I got the wrong tool here.
It just never wanted to stop.
Yeah, a trend line that would never stop.
Yeah.
But we do have a little downward channel. I mean, you can see that we have this trend line from up here, starting with this. There's a hit. Here's a hit. So as I like these, I kind of like this as a trap to go short. And so I'm going to do that. I think right now, this thing has a lot more room to the downside. But it's going to have to get through this. It's going to get, if it comes down, it's probably going to have a little bit of a bounce. I'm just trying to see. I do like the, now one thing about it, again, this would be more of a breakout trade. I'd rather see a breakout come back up and retest the wedge. If it, right now I've got a pretty well flat line. We've got this is a 1 hour 62, so we could get a bounce off of that. If we look at the 15-minute, let me put that, let me mark this one here. This is 1 hour 62. When you get these higher time frame markers, they usually respect those. Let me see if I can just make this white. And we'll go back to our 15-minute chart and we'll see what things look like. You see that's right at where the break, this could be the head fake on the downside. Coming over here, we're looking at, this is where the origin of this move came. It started trending. This was the origin where it started trending. Nice move up, came back down. Here's the last test. So we have a zone down here, and then we have another zone right in this area where it was rejected the last time. Remember, price has memory. So here's the break of this trend line. Here's the alert. Here's the break of the trend line, which is the wedge. And we'll see if it comes down. If it comes down, I'd like to see it close below these some of these wicks. We get it close below the wicks, then have a little bit of retrace back to the wedge, then we could maybe take it short. We use this as our reference line. Entry zone to sell. Bring this down 2 pips. Let's see, that's at, where are we at here? That's at 74.17, bring it down to 74.15. There's our zone. As you can see, it broke, came down, it wicked right down 2 pips, which is pretty much right, a little bit more than the spread. This could be a head fake. This could be a trap down in this area, but if it can break through this area, then we're looking at going lower. But remember, we have our 1 hour 62 period moving average down there. We do have some pressure from the upside, but right now it's still sort of getting lower highs, higher lows, and it's still not quite ready to break out. Let's take a look at our 1 minute chart and see where our moving averages are on this one and see where our fib lines are. Oops, that's pretty high. Let's check the fib lines, see if there's any 15-minute fib lines that we have to be aware of here. Here's a red fib line right there. I'll double check to make sure that's right. Yep. So we have a red fib line right here. So that's a 15-minute red. Remember, all the 15-minute colored lines, all the lines of 15-minute are blue lines on the lower time frames. So we'll go to a 5-minute and we'll take a look and see where the 5 minutes lie in between. Where'd they go? This 15-minute red is the 5-minute blue. Looks like it's starting to break through. Let me get my panel set up here in case we're going to trade and take this one short. I'd like to see a close inside. I'd like to see a close below these wicks down here.
Happy open mic Friday, everyone.
Yeah, good
Hey,
morning there,
Matt. How
Matt.
are you?
Glad you
I'm
could join us.
yeah, sorry I'm running a little bit late. Breakfast took a little I ordered breakfast and well, it was late and I don't like cold breakfast, so I apologize. What are we looking at today, Al? Are
Well, we
we
have several
non-farm
alerts.
payroll?
Well, thank you. I forgot. Yeah, we need to check we do have non-farm
People
payroll.
need to
Pretty
sit
sure.
down today,
Yeah,
guys. You're
yeah.
gonna get
This
your
is
butt
here's
handed to you.
thank you. Thanks for reminding me on that. I forgot all about that. Yeah, today's Friday, non-farm payroll Friday
15 minutes.
at 8:30. Here we go. 8:30. We got lots of red folders, so
Get
it
ready.
may be worth not taking any trades until after the non-farm payroll report is done.
Because
And
we're
we'll
using
just
tight stops. You can't trade non-farm payroll and use a 7-pip stop. You
no,
can't.
you really can't.
No. There's no way you're going to end out in profit, because what happens is the vast majority of the time it's going to go 20 pips in one direction and 100 pips in the other.
And it will do that all at the same time. So just enough.
On one candle.
It'll take your stops. I mean, there are some times where it's kind of a snoozer, but
Yes.
I have a
But I
feeling
don't
that
think this is going to be.
I don't think it is either. I'm
No.
kind of thinking it's going to be could be a wild ride here.
It could. And that's why I'm kind of sitting a little idly by there. You got a nice wedge on Euro USD, eh?
Yes, in fact, we had alerts. We had several alerts this morning. We have the Aussie, the US. Oh gosh, we just got another one. We have several alerts today, right now.
Well,
we have Aussie US at 8:15. We have a US CAD. We have a Euro US.
I think I like Aussie US. And the reason is I tend to see it not be as, for the lack of a better word, as stupid on non-farm payroll. But we'll see. I'm very hesitant because there's no point taking a loss for just because you wanted to take a trade. Just doesn't make sense.
Yeah.
Holy smokes, Al! Remember our trade from the other day where we did Kiwi US? Wow, that thing ended up being beautiful. We got out really early, but we would have made our first stick target because it went 0.7100, 0.7104 is where it ended up going, and then it broke to the downside. It was so, man, the setup was beautiful. There's actually like two solid wedge trades in one trade, so we could show that later on after non-farm payroll gets its thing. But I'll be honest with you, I'm not trading pretty much on non-farm payroll.
Yeah.
Not with this kind.
Yeah. If you do it in demo, just so you can get a feel for how volatile it can be.
Yep.
In fact, I might take this one short on a demo with this. So we got about 10 more minutes. It does seem to be having pressure to the downside. Let's see. This is the Aussie US dollar. Let me see what it looks like on another chart here. I like to just give people an idea of how volatile and how. I mean, you can make a lot of money if you're in the right direction. You give enough wiggle room, but the Aussie US, I would say, is going to be a short on this one. So
yeah, because
Kiwi, I'm going to take this on a sell. Let's see, we're going to do sell on the.
Yeah, Al.
74.16. I'm going to go.
Looks like a pretty good short, my friend.
74,
at least the overall setup does.
Sell stop. Look at a sell stop on this. And we're going to be looking, now we'll be looking at this target down here of 7404. 7404, we're going to be looking at 7404.
I got some observations from yesterday, Al.
Okay.
Later on, when we have some time.
Okay. We'll take a look at it. And let me
Yeah.
get this trade in here before we let me think what I'm doing here. I'm going to do a sell stop at 74.14. Sell stop at 74.14. And we're going to go for, let's see, we'll go down to 73.98. 73, I'll make a 73. Let's see. Make it 74.03. 74.03.
So US CAD. We might have some dollar weakness, guys.
That'd be 11 pips on that. And we're going to do that. We're going to put the stop there or put the target down here on the below this one. And if it gets anywhere down, I'll just do a market order to get out of it. And the trap, I'm going to look for a trap to sell up here at, I'm going to say do another sell order at 74.31. Sell limit. So we'll put that one in there, and then we're going to do a sell limit. 74.31. Let's see if there's another fib tool here. I like trading with the fib lines. There's one all the way up here. Let's see if to put a 2-minute on to see where those are lie. 74.33. 74.33. And with the take profit of, we can go for 12 pips. Stop loss 10 pips. And it won't let me do it because I have too much of an order in here. Let's make this a little bit smaller of, let's call it 10,000. Still doesn't like it. Let's just go with 5,000, see if it likes that any better. It may not do it because I have opposite positions open. Yeah. I wonder won't let me do it. Your international brokers will. Maybe we'll just eliminate that trade. We just won't do that one. And we'll see how it works when it. And we have what, another 6 minutes, 5 minutes. Okay, the trade's all set up for the breakout coming down. My target is down here at the bottom of this supply zone. Right below this green line, we have the green and the blue line right here. I'm going to sort of split I'm going to take it up to the green line and see how many pips is that. And that's be my 7 pips. These moves oftentimes are a lot bigger than that, but we just want to see what happens here. Actually, move it down to the blue line. They like blue line to blue line. I said, this is just target shooting. This is just to give you an idea on how these things, what they look like. I'm not taking this live. This is in demo. I'm only doing this for demonstration purposes only. Just to give you an idea on how these things play out here sometimes. Sell stop, and then my range is going to be up here in the trap. I'm going to put it above the trap at 74 for the stop. I'm going to go 74.36. 74.36. So if the trap holds, it'll keep me in if it's for the whipsaw. So right now, if it breaks out of the bottom, it'll just get me in and get me out. If it breaks up the top, I may not get in, but if it goes up the top and breaks up, then it was a non-issue. So I'm basically risking 14 to, I'm risking 22 for 14. Oftentimes, if you try and do these trades, if you wait till the trade happens and you try to get in, there's so much volatility that you won't get filled. They'll do a market order, but the market won't. What it does, it puts your trade into the queue of you're in line with the trade at the market order, but that order will keep on fluctuating until your number comes up to get filled wherever it happens to be. It could be to your advantage, it could be not to your advantage, but I've seen it taken. I've seen to say take 20, 30 seconds for the order to be filled on a real volatile non-farm payroll move is not unusual. So if you just do a market order at the time, you just may not, you have no idea where you're going to get filled or where you're going to get out. So you're better off in just having already set. So right now everything's in the queue already. So as soon as it hits there, if there's 10 people ahead of you, they'll get theirs filled first. But right now, if anybody tries to do a market order, I'll be in there before you do because my order's already placed. But basically, you're just trying to try and stay within the range. And so it may just go up and keep on going, but usually what happens, it'll go in one direction, and then because everybody's sucked in, they go short, short, short. All they're doing is they're getting all the orders filled, and then they go short, and then they whipsaw it back the other direction. Like I said, if you have a tight stop, you'll get stopped out either direction. You'll get filled and get stopped out before you get filled again. All right, anyway, about 2 more minutes. You'll start seeing a move coming up just before, as the news comes out, the market makers already have the news in their hand. They already know which way they're going to go. They already know where the orders are. They already know where the stops are. And they're just going to go and grab the money wherever they can find it. And they'll go back and grab it the other side. They see things that we can't see. All we can do is project where price was at one time and just play the price action. So we'll see what happens here. In about another, so it's always fun playing these. I don't usually trade these with live money. It's always fun to see how well I can do, if I can do it consistently and pick the targets. Now, one thing about with these wedge alerts and some of the ways we've been trading, we have a pretty good idea which way things are going to go. I'm pretty sure this one's going to break to the downside.
Yep. Look at that thing go. And USD CAD could be going to the downside. We're just going to have some fun. But I could see that to the downside as well. Even though it's the... This will be interesting. 1 more minute and everything's going to explode or be completely dead.
Yeah.
One or the other.
Yeah, exactly.
It's going to go up or it's going to go down, or it may go both.
Yeah, but kind of like what do you call those? Not a forecaster, not astrologist. What is it?
Meteorologist or
Meteorologist. I knew it was an ologist of some type.
It's either going to rain or it isn't.
Yeah, exactly. And in our case, it's going to snow or whatever.
No, or it isn't. Pedro says, check out Euro USD.
For the sake of some other people that I'm aware of, I would be of the opinion that what is Euro USD going? Oh, it's up?
So that means the dollar weakness.
Right. And that means US CAD's going down. Whee, look at that thing go down.
You can see, look at that. We actually got entered, but it didn't even come close to look at this candle and look at just look at how that spread went.
Yep.
They just widened the spreads, grabbed my trade.
Don't chase this, by the way, because your entry is going to suck.
Look at that candle.
Yep. What's
This is what I find so amazing. Look at where this candle is.
Yeah, exactly.
Right here.
Check that.
At 74.15. Look where I got filled at 74.08. They widened that spread.
Just enough to enter.
Just enough to get me. They basically came in. They widened the spread enough to grab my trade, and then they ran it to the other direction. And that's what they do. Now it's up in my trap area. Got everybody. So everybody say, "Oh, it's going long." So everybody's buying like crazy here, and guess what they're doing? They're selling right to them. And now it's going to come back down. You see how wide I had to keep my stop? I kept my stop way up here, above the trap.
Yep. UCAD melted.
Look at the range of this candle. Look at the range. Here's the candle range, but here's really what they did. Here's where I got in. Here's where they took it out. That's 21 pips.
That's awesome observations, Al.
Does that
Very
good. Does that number sound familiar at all? 21 pips?
Of course it does. Of course it does. And guess what's going to happen next? Look at that candle. Look at that big rejection wick. Where's that big rejection wick hit? That trend line?
Right at the trend line.
Huh?
See, this is what just amazes me. If you had an order in, like I said, well, I had the order in right here.
Yes, you did.
The candle didn't even come close to tagging it, but guess what happened? There it was. And these are the reasons why you don't trade the non-farm payroll.
Yeah, sometimes it's better to pull out and leave it on the table for the next guy who likes to gamble.
Yeah,
that's as close as I can get to explaining trading non-farm payroll. I don't do we don't do a whole lot for macro level economics and stuff, and we just do the technical and analysis side. And because of that, it's in all of our best interest not to touch non-farm payroll, if that makes sense. Now, there are people that have just made 6 figures off that move.
Yeah, the market makers did.
Lots of, but even
market makers did.
Even smaller traders, there are some that make a living off of taking one trade a month, and it's on non-farm payroll.
But you really have to know what you're doing, and you have to give lots of room for the swings.
You're absolutely correct. You are not going in there.
And basically what you're doing is your target shooting.
Yep. See, here was good, right, Al? Like this overall, that setup, not bad. US CAD just got obliterated. What Euro USD is on its way down. Look at that. You mind switching to Euro US?
There it is. Yep.
There, look. I want you to take a quick look at the wedge trend line. I want you to look at that. There's no randomness in this. Okay? These trend lines are solid. That's all, like I said, that's as good as it gets, guys. You're not going to have any closer tag than that.
Look at
in the
this,
Forex.
and look at this other trend line here. I check this trend line. Here's an anchor. Here's
Yeah.
the hit. Here's the trend line. Even with that report, look where it did.
Yeah, in that trap zone. But look at I want you to notice the bottom of that C, the AC trend line.
Right here.
Yeah, right there. It tagged it to the pip. Right there. Oof, that's black. Okay, yeah. Right there. Wedges are where it's at. And wedges, what you're learning in wedges, you can apply to any other trading, any other strategy. You can apply it to bags. Because you can combine your knowledge of wedges with anything. And that's why it's a skill set that is worthwhile to learn. Wedges, trend lines. US CAD's going down. Oh, I'm sorry. I keep on interrupting you.
Every time I try saying something. Okay, I just wanted to read what Leslie said. She said that was really interesting to watch. Thanks for demonstrating.
Yeah, observations are where it's at. You know why one of the reasons a lot of people fail is they don't observe. They try to get in there and let their emotions, and they just want to swing the bat. Well, you could actually make significantly more money if you sit on your hands and observe what the market's doing and take notes.
And the thing is, but
go
one
ahead.
thing about one thing to observe, though, you have to know what you're looking for. And this is what we do in this room every day is we try to have you learn to train your eyes to see what we see. And we're constantly looking for other factors that help to play into the basic philosophy. And basically, the basics are price goes to trend lines, it goes to price points. And what you're doing, you're just trying to find out, you train your eyes to see what the trend lines are, where they are, and where the price points intersect with those. And that's about all I have to say about that. You can see, like, here's we talk about these blue fib lines. Here's a blue fib line. This one, let me see what time frame this one is. This should be, this is a 15-minute fib line, which means 15-minute, 5-minute, 2 minutes are all blue. That's a strong point. And you can see where how it just kind of, it's just bouncing right around that. Came up, retested it, went down, retested it. So if I go with my 15-minute, let me just put it on here. 15-minute blue. And we're going to find where the next, the green was up, should be a red one down below here, down here. So this is a pretty wide range here. But let me put some 5 minutes on here. That gives a little bit better range for what the range that we're looking at right now. So here's the 15-minute blue, and then here's the 5-minute red. So right now this is the range. You can see where all these are right here by the green. See where all this prices is right here by the red. This is the range of trade, and guess what? The blue is right in the middle. And that's why, like I said, I really like the when I see a 15-minute blue line, I know that's going to be a real strong area. And then I try and find the 5-minute areas on either side of it and see what the range, and you can just see where it's ranging right between here. So in other words, it's really, in essence, it's going sideways between, here's the blue one, sideways between the 5-minute green and the 5-minute red. Yep. This is range. This is a playground. You look at that and you say, okay, now you break this down. Now you break this into thirds, and you put this on 2 minutes. This is what makes this tool so nice. It just breaks it down right for you. And now you see where here's a blue. So here's a blue now. A 2-minute blue, red, green, blue, red, green. And now you can see where this was a box where we had the alert. Guess where it was? It was right here between this range right in here. Again, here's the blue, but here's the 7 pips above it, 7 pips below it. And where's most of the price been hanging out? You can see it came up, base went up, came right back down. It'll probably come back down, come right back into this area. It seeks these levels right in here. Let's see where range bugs. That's what I'm looking for right there. And look where this, see this trend line right here? Where is this? What do you see here? A red fib line to the tick.
Oh, that's true. I never even noticed that.
I'm saying this is why we use 7 pips because of these lines are 7 pips apart. 5 pip target, 5 pip. We try to take 5 pips with and try and get out because give 2 pips for the spread. Let's see. Guess where? Here's the report, right up to the red line. Came right back. Now it's back in the blue. It'll probably come back down to the green. But now the report's all done, so now it's just like, well, now back to business as usual. But now you pretty much have to wait a few. I usually like to let it settle in for about 30 minutes, 15, 30 minutes. So after the report, let the price sort of settle in, get a few 15-minute candles under your belt, 5-minute candles. And right now you can see we had this wedge alert. And right now we're finally getting these RSIs coming down. But again, it's retesting. Here's where your trend lines are. Guess where it is? Right now it's at a 15-minute. It's coming right into a 15-minute red candle right here. And here's the trend line right at the same point. Let's see what it does. Give a 7 pip trap. Comes in. See, now what you can do right now is this is already down, it's coming down to the extreme. As it comes into the trap, take the trade. And see what right now we've got, you've got upward momentum. This is a pullback coming into our trap. Let's just do this. Let's take a check and see how well this trap works. So I'm going to do a buy. And we're going to do a buy limit at, we'll just say the red line of, what we'll do is we're going to wait. Here's a 15-minute candle. Let's go to our 1-minute chart. And we'll look for our moving averages to come down in here. It's coming into the trap. We got a green candle. Buy market. And put the stop down below the trap zone. Whoops.
Al,
yes.
Could you just explain trap for some of the newer people that are in the room today?
The trap is basically where I call it. It's the area where you expect the head fake. Where what the market makers do is they know where the orders are, so they come on down and they say, okay, we're going to drive the price down here because we want to make a buy down here. So they get everybody to say, okay, and you see how strong this move is. When you see a real strong move right down into an area where there's a breakout, that's the trap. What happens is they say, again, they know these price points. They know where the trend lines are. They know where people, the retail traders like you and I, are, and we form the wedges. That breaks out of the wedge. I mean, how many times do we get a wedge alert, and we say, oh, there it goes, it's breaking out of the trap. I mean, sometimes they'll feed it to you and you'll be able to get those 5 or 7 pips. If you go for a bigger run, you'll usually find there's something down here that's going to, the price action is such that they know that there's a lot of action money down here. They drive it down. They get you to go short. They fill the orders. They know where your stops are, and then they take it back. So this is why I like I would much rather take a trade when it drives into an area where there's possibly some unfilled orders or some orders sitting to be filled, and then when it hooks back up, and then when the RSIs hook up back, when the blue one hooks up, it drives down. It's all the way down here, the 89.75 area, comes on down. When this blue one can kind of come up and cross over the orange one, that's the end of where the trap is. Let me get back to the 5 minutes so I can see where I drew this thing. So we had the fib lines. That's it. I drew this. I moved this because I lost my place here. Came right down. See how it bounced right off that green line? I want to keep my stop on the other. I would like to keep my stop outside of this box area. I want to keep my stop below the blue fib line. Now, if it could just drive it on down. Now, just blew right through that. So, but here's another blue fib line.
There's still so much room that it needs to go down before the trend actually changes. It's been on a serious uptrend forever. So this is not convincing me that this is the turnaround point of this entire move. We're forming a really big wedge at the 15-minute level. So this is breaking the bottom of the wedge.
Yeah. This is basically broke the bottom. See, where did we have here was the original wedge. We had the report, came back down, got everybody in, came back out, got everybody going short. They knew the stops were up here, so they get everybody in, going short, come back in.
What's that?
Grab their stops, and now they're running it back down again.
Hey, did you notice the price point on that? 21.70. So here's an interesting note. When if you want to kind of protect yourself a little bit more than usual, don't use round numbers as your stop loss.
Yes.
Like do something a little bit different. Put maybe 1 or 2 or something around those lines. But don't put 2160, 2170, 2180, especially when you're dealing with big moves, because market makers like round dollars. They don't like small little portions, and that comes to play with the quarters theory as well, doesn't it?
Yeah.
Not that I know very much about that, to be honest, but
well, it's a lot of what we do with these fib lines. So to be perfectly honest with you, and remember we said it likes blue lines to blue lines. Well, here's the 2-minute blue line. And it's starting to have a little bit of a pressure there. Now this thing could just keep on going. No, I mean it's the announcement was over. They got everybody in. They took everybody's stops. They got everybody back in again. Now they may go ahead and start running on down, but you still have this trend line right, this Fibonacci line right here, the 62. Now, if you get a close below here, then you're probably looking at, here's a strong move up, came back down, retested. This was the test zone right in through here. See where all these candles are. This is where it broke out, came back in, it's retesting this area. Now, if it breaks out of the bottom, then it's going to come down and probably retest this, where the origin of this whole move was. Okay.
So we're probably going to be in a 3-wave on Euro USD right now. This is going to be a correction wave, and I don't do a lot of wave counting, Al, but if you look on the 4-hour chart on Euro US, if you want to play on that a little bit and go back
just
to
take these all off and
go back to the beginning of November. So this is what I'm talking about, guys. The big stinking move. So beginning of November.
Right here.
Yes, sir. So that bottom all the way, you got a big move up. So one, I have mine shrunk a little bit. spaced out a little bit more, I think, Al. But you see from the 4th to the 9th, that would be your 1. And then that's your pullback, 60% pullback.
So let's do a little wave count here on this one here. So
yeah, we'll just play around.
There's 0. Here's wave 1.
Yeah,
here's
that's
wave
2. This is your 3, all the way to the top. And then 4.
4 is going to be probably somewhere around in, I'm going to say probably around that area, and then 5.
Yeah, 5, and then reverse. Something like that. And
if you do this and you put the Fibonacci on here.
Yeah, you can almost measure those levels. What is that? Is that 61.8?
Right now, this is the 61.8 is here.
Look at that.
This is a 50 to this is 50 to 61.8 retracement. Then it comes back up, and it's right at here's 61.8.
There's 1618.
Yeah, so actually it may come up to like that. It may end up. This move may end up. It's still moving up.
It's breathing
up to that. It's breathing. It's breathing a little bit.
Now this is not well, I guess it's kind of forecasting, but it could be totally wrong. It's just it looked like a very nice Elliott wave count.
But look at this right here where you see the 123.6. That's a major.
Oh, it's huge.
And guess you had a red candle came right up there, tagged it, and pulled back. Now this is really, now right here is where the trap is going to be. If it comes back down, this is where the last supply is. Now the other thing, if you look at with this candle, you see, if you look and see where the strongest blue candle is, which is all the way up here, and once it breaks the bottom of this blue candle, this blue one, actually here's a higher blue one, so we'll come over to use this one. And then we come down to, now this candle is breaking the bottom. So right now we're on a 4-hour chart. Keep that in mind. And so we go up to, here's the candle here. Now, as it breaks the wicks, you draw the wick to wick on this blue candle. Let's go to a 50-minute chart here now.
Hit auto, Al.
What's that?
Auto, hit auto.
Oh, auto. I probably drive you crazy, but I drive you nuts with that, don't I? Okay, well here, you can have, this is a nice little picture of it here. You see, this is what I was trying to explain. Now it's pretty much on the 15-minute chart. Here's where the high was. We have blue candle. So here's the peak, came up, made that, it came down and it broke the box of this, came back, it broke, closed below, and guess what, came right back up into this area. This is our supply zone right here. Supply. I know it's in there someplace right there. Came back and now it rejected it. Now, after it comes back up, it will probably come back when it. Now, you could have an order sitting in here to sell, up at, to call a supply zone, call it a trap. It both means the same thing: support, resistance area. But you can see where it came up, made the blue candle. It broke below the blue candle. This red candle blue came back up and retested. Couldn't break the high, and then here's a drop. And then once this thing will probably come back up. Eventually, it's going to come up. And so right now, there's market makers have orders sitting right in here, right in this box here. There's still some orders that they want to sell that aren't filled yet. So they're driving on down, get everybody going short. They're going to have their stops up here. They're going to take their stops, drive it on back up. And that's how they play the game. And what we have to do is trying to figure out where these areas are. Like here's strong move up. There's orders sitting in down here. And we're going to put, here's a pivot low. Here's where the move came up. It broke this, came back up, retested it. There's still some orders sitting in here. So this candle right now is probably going to drive down eventually somewhere. And now guess what? Here's now the question is this trending or is it going sideways? Strong move up, strong move down, supply, demand, and somewhere in between here, it's going to be doing all kinds of little zigzags. Let's see.
You know what's going to happen, Al? You know what's going to happen with this, right? Everyone that's taking these big fat stop losses is going to think that this is the end of that move, and they're going to take a whole bunch of short positions, and they're going to get their butt handed to them.
So this is really what a lot of the swing traders. I mean, we're doing micro trades, but ideally, what we'd like to do is find these levels, these zones, and we just once it gets into the zone, now we have a really tight stop. You can say, if I'm up here, and so if it comes back up into this area, and I put my stop above, say up in here, you're looking at a 12 pip stop with the possibility of a 70 pip target, and vice versa. So the big thing is to be patient enough to see where you have these higher time frames, where you have these big swings like this. Then you look for, then you just have your order set in and say, okay, I'm going to go and set a, I mean, you could just do this. You can just go, wait till you get a move down, get a wedge into the wedges in, gives out, breaks out. Once you get that little wedge formation that gives you the breakout of the wedge at the extreme, now you've got your nice entry. And if you looking at, just like right here, see how this is the bottom of this move. See where the RSIs are. Came down to 89. This one came down to the 75. You don't want to try it. And what happens is the market makers drive it on down. It's coming down, and people say, "Oh, I'm going to go short because it just broke this line." No, it's not going to go short. They're just going to go.
It's going to come back up.
It's going to come back up and eat your lunch.
Yep, it will.
So you're better off when it's pulled back. You want to be going long on these pullbacks rather than try and wait for a breakout. And that's one of the problems which we've seen with some of these wedge breaks is on these lower time frames. Is you get here and you think, oh, it's going to be a breakout, but it's really you need to wait for it to come back up, hook, and then come back down again. Like you see, like this candle right here. Just looking down, it broke the 30-minute 62, which we say, oh, can we like that? But it hasn't closed yet. We're on a 15-minute chart. Now, if we look on a 5-minute chart, you're going to see that it probably came down closed. But now look what's happening here. We're getting the crossovers. And now, and let's see where our fib lines are. Let's see if there's a fib line anywhere. See, there's a fib line right there. 37 to, it's a 5 pip. It came down. Now we got the cross. See how on this 5-minute chart, look and see how they've crossed. Once this candle closes, and the 1-minute candle is still moving in the, wait for this to pull back, hook back over, and now you're in the trade. And now you've got a very tight stop loss. Strong move down. Look, strong move down all the way down. Broke this, came back down. And now we're looking for this thing. Now we're looking to see what it does on the 15-minute. The 15-minute is still saying, no, we're still going short. Once this thing hooks, once these hook, you look for the pullback. So what I've been doing a lot of times is I'll take this, and as we mark this here, where right now, I'm going to change the color just so you don't get confused with what I'm doing here. Here's the first entry. Now they're still pointing down, but now this candle closed. This 15-minute candle just closed. It's still pointing down. This one's hooking back up. It's coming back up. It's going to be retesting this area. As this one comes up, when this one gets up into this, when the blue candle gets up into the 75, 69 zone, and then this one hooks. So it's like here's a 1, 2, 3 hit. So right now I'd be looking at I'm looking for these RSIs to come on up into this 75, 60, 89 zone. Once it gets to the extreme, and then this one, that's number 2. Once this gets up into the extreme, and then this is pointing up. Well, when this thing's pointing up, you're looking for the pullback. Well, this is pulling back. This one's still pointing down. Here's your trap.
That would have been an awesome buy, Al. Because if we knew that as soon as that bit, those that 20, 30 pip move on the downside, it was going to go right back up, right? We knew that.
Right.
Like that was a pretty sure move.
But you're still looking at right now. You're still looking for this thing to come back down and retest this area. And when
Agreed.
you reach, and this is where the wedge comes in. So when you draw, so here's your bottom, here's the top. We don't know where it's going to come in, but it's probably going to come in somewhere right around in here, red fib line. Come back up, and then once you get it starting to break the top, now you've got. So we'll just sort of watch this here as we have some time here. Just came back down. Broke this blue candle, broke this one. It's making a new pivot. These are coming on up. This one's coming up. Remember, this one over here, these RSIs, this one hasn't closed yet. The one that closed is where it's pointing down. Now this is the pullback. This is rejecting this area. Here's the pullback over here. Once this gets up, now once these hook, now you're going to be retesting the low. Once it retests the low, as long as this C doesn't go down here, now that you could get divergence if you get a lower on a lower time frame. If this comes down and breaks this with a higher with a stronger RSI, that's your divergence. But right now we're looking to see this thing to maybe get just about up to there, have this wedge hold. Do we have a fib line there? I like the blue fib line. So if it can hold as we move this thing out, we want to respect this fib line as long as it doesn't close below the A on this pullback. Remember, this was still pointing down. It's trying to come out of this area. This one's saying, okay, come on, follow me. I'm pulling out. It's like a rubber band. It's going to pull it back. Well, we left somebody. These are the scouts. Now this guy's coming back down. Now you could take it short, but it's going to be somewhat contra trend. What you want to do is have it come back down into this area, then take it short, or then take it long. And if it breaks, then give it some room. And if it breaks, well, you're not going to. If you take it long down here, you can. This is where I would call the trap. Here's your low. Here's the bottom. Here's the next fib line. Here's the blue fib line. Here's your trap.
Okay, Leslie says, thanks for that in-depth explanation of using the RSIs. I have developed my eye to somewhat pick out the overall moves, but seem to enter too soon and get stopped out only to have the price move in the direction I wanted. Learning.
Exactly. And that's one reason why these 2-minute fib lines are so nice, because it gives you this is your 7 pip area. Actually, but yeah, I think this is 7. Let's see. This might be 4. Let me see. Euro US. Here, here's your 14 pip area. If it comes back down into this area, even if it breaks the red line, you want your stop on the other side. And you can maybe give a little bit more room if you wanted to, and maybe just bring this on down to here. But I like the fact that we have the blue line here. It's going to come back, test the blue line. And then here's your entry. And you put your entry in to go long, to buy, limit at, let's just say the middle of the, let's just call it right here, because you want to get in, or you could put it right in the middle, say it's 21.34. So 21.34 to buy. Take profit, stop loss. We'll give it 10 pips. Boom. There's your trade. Move this down, maybe keep it out a little bit of harm's way. And then you wait. If you're wrong, you don't lose much. If you're right on this one, your target's up here. And worst case scenarios, you don't get filled. They say, well, no harm done. Best case scenario is, or worst case scenario is you come in here, get filled, and it takes you out. But now you know that at the bottom, the trend hasn't changed. But on the higher time frame, we already determined on the higher time frame that this is a good area. Oh no. There we go. Any questions? What do you think, Matt?
I think that this was a really good time to observe some things. This was a really good time of observation. Sometimes it's better just to observe than take demo trades. Figure out what the market's going to do.
I spend more time just looking and drawing and graphing than I do taking trades. I'm just constantly, even in slow markets, busy markets, but you do find out that there's certain times of the day when there's more volatility. A good example is last night, especially before non-farm payroll report. There was like no movement at all with anything. There would be trade alerts and all over the place, but nothing was going because guess why? Because we had the non-farm payroll coming out this morning, and so everything. So they were just holding their positions, filling their coffers, and then waiting for the report so they could take their profits. They were just accumulating. Boom! They're selling. They're buying. Or they're selling. People are coming up. They're buying. Well, the big guys are selling to these guys, and the report comes out. Boom! That drives the price down. They take their profits and they buy some more down here, and then brings it back up again. And that's the way it works. Any questions, comments, anything anybody would like to look at? Anything they'd like to share or discuss or get more clarity to? I'll be kind of curious to see what happens with this as we drew this thing out. This scenario, strong move up. There's some wicks down here. Now this thing it came, you can tell it, I mean, it found these wicks right over here. If you draw this over here, remember I said that when you look for wick, if you keep running into wicks, you draw the wicks, you draw your zone. Once it breaks these wicks, there's nothing here to stop it. This was a straight move up. I'm going to pull this on a 15-minute chart. I just moved it, I think. On the 15-minute chart, it was right. So put it back to where it was. So I moved it. I don't get used to using this button yet. See, as you look and see where there's a wick there, come back over. There's the body. Came back down, and so move up, came back down, retested, found some more. The buyers came in right here, pushed it back up. I would say that this would be the next area. This is a strong move up. You can see there's almost vertical. This is not vertical. This one's vertical. This is going to be basing. They're going to have to get through this. It already cleared out all the orders. With this wick, it cleared out all those orders. But it found some more buyers right in this area. That's why it was rejected. That's why I've got my buy order here. It just came in, just found some buyers right here. So right now I'm in here and I'm going to keep my stop on the other. I'd like to keep it on the other side of this green line. Get back on our 15-minute chart. Spread this out a little bit. Actually, kind of like this here, like this. Here's our trap. That's a little bit more than we need to. Let me go back on a 2-minute. So here's blue line. The blue line. Here's the lowest point. Let me just take this one off so you can see the candle came back down. I'll lock this. And we'll have our entry here. And our target's up at the blue line. We have a new high up here. So came up, coming out of there, came back down into this area. Now the question is it going to stay down here or is it going to, and we have the higher time frame is all the way down here, but it's going to make some stops, or you could just wait till it gets all the way back down in this area. But the lower the time frame, the more you can see where these, because we're just trying to get our 5 or 7 pips out of it. And that's about all I have to say about that.
Yeah, that's pretty much all she wrote. There's nothing.
See anything else? How would our New Zealand deal do here? Entered on close. Again, this was the non-farm payroll came back in. I said it was interesting. As you can see, this is the one that just amazes me how never even came back, but still got me in the trade. And my stop is still up here. So still respecting this trend line. So if I move the stop down to this blue, let's see.
That Al, she's coming right back up.
Yeah, it was coming right, but retesting it.
Look at that trend line.
But if it breaks, let's see how much risk do I have there. That's 26 pips. That's a pretty, this would not be, this wouldn't have been a good trade. And I said the plan was I wouldn't have been filled, but I was. And that's where the big problem is with these reports like this. Let's take a look at the euro yen real quick. There was we got an alert for the euro yen.
Euro yen.
Yep. Not a wedge alert, but another alert.
For sure.
Let me see what we're looking at here for that.
Is it saying buy?
It's saying euro yen sell.
Oh, well, I would wait a little bit for a sell. I would wait for it to come back up, and unless you have a bigger stop loss.
It's kind of right in the middle of a move coming off of heading to the. I could see where it could be a sell. Let me see here. Yeah, I think you could probably get 20 pips out of a sell on that. So other than that, we don't really have a whole lot else. We could stick around, take a break, and come back and see how the market opens up, and then we'll call it a day. So if we want to do that, let's just take a break for 5 minutes, and then come back and we'll watch the U.S. market open up and see what it does.
Sounds like a plan to me.
And so
Seems brilliant.
So we are on break.
See you guys in a bit.
Okay, we're back. And let's see what happens when the market opens up today. We'll take a look at the Euro US, because that's one we've been looking at here. I don't know if any of you trade the S&P at all, the S&P index. I'll put that on since that's a nice, that's usually shows a good little idea on how the market's going to open. You see, it's been pretty flat all night long. It's just been going sideways. This was the candle for the non-farm payroll report. And you can see it came right on up to the overnight high. Here's the overnight low. So here's basically the range it's trading in. It looks like it's opening up higher today. And look at a higher time frame, see where at. This was the all-time high right now, right over here. So we draw it from the all-time high to the overnight high. I would look at that as being a trap. If it makes new highs, there's just no telling how far it's going to go. But we had a nice rejection yesterday right at the close of the day. It was a nice rejection, came on up. So actually, this is the candle that we are in right now, this range. And if the trap is broken, it's broken, and you just so you could try and take a trade to go short right up in this area, and if it breaks through, you don't lose much. If it wins, you could all range all the way down to here, and then possibly down to here to the downside. Your RSIs are coming on up, and if we can start getting the hook, Here's the overnight high. This is the high for the with the non-farm payroll. Have a little trend line here. There's the anchor. There's the hit. We'll see if it comes back down, gives another hit, or if it breaks through, or if it goes up into the trap area. And that's about all I have for today. So, any last questions, comments? If not, we will see everybody Monday. Have a good weekend. Have a good weekend and stay green.
Absolutely, guys. Thank you so much and see you on Monday.